Amazon, the e-commerce giant, recently issued a stark warning about potential slowdowns in consumer spending. This cautionary message should serve as a wake-up call for all Americans. It underscores the financial challenges many are facing. From soaring living costs to economic uncertainty, there are storm clouds gathering on the horizon. Amazon's warning is not an isolated incident. It reflects a broader trend of economic anxiety. Americans are grappling with rising prices for essentials like housing, food, and transportation. This financial strain is forcing many to tighten their belts and rethink their spending habits. The situation is compounded by concerns about the overall health of the economy. The Federal Reserve's efforts to combat inflation through interest rate hikes have introduced a level of uncertainty. Businesses are hesitant to invest, and consumers are cautious about spending. This economic climate has created a sense of unease for many Americans. Amazon's warning should not be ignored. It is a clear indication that the road ahead may be bumpy. Understanding the underlying economic factors and their potential impact on personal finances is crucial. By being aware and informed, individuals can make more informed decisions to navigate these challenging times. One of the most pressing issues facing Americans today is the relentless rise in the cost of living. This issue has become a daily struggle for many, affecting their quality of life and financial stability. Prices for essential goods and services have been climbing steadily, putting a strain on household budgets across the country. The impact is felt in every corner of daily life, from the grocery store to the utility bills that arrive each month, from housing to healthcare, transportation to groceries. The cost of simply maintaining a basic standard of living has become increasingly burdensome. Families are finding it harder to make ends meet, often having to make tough choices about what to prioritize. The housing market in particular has become incredibly competitive, with prices reaching record highs in many areas. This surge in housing costs has made home ownership a distant dream for many. This has made it increasingly difficult for families to afford to buy a home, forcing many to rent. Renting, however, is not a perfect solution, as rental prices have also seen significant increases. However, even rental prices have surged, leaving many individuals and families struggling to keep a roof over their heads. The fear of eviction looms large for those who are unable to keep up with the rising costs. The cost of food has also skyrocketed, making it more expensive to put meals on the table. Families are now spending a larger portion of their income on groceries, which affects their ability to save for other necessities. Supply chain disruptions, inflation, and global events have all contributed to this increase. These factors have created a perfect storm, driving up prices and making everyday items less accessible. Families are finding themselves having to make difficult choices at the grocery store, opting for cheaper, less healthy options, or cutting back on their overall food consumption. This can have long-term health implications, especially for children. Transportation costs have also become a major burden. The price of gasoline has a direct impact on the cost of commuting and traveling, affecting both personal and professional lives. Gasoline prices have fluctuated wildly, making it unpredictable and often expensive to fill up the tank. This unpredictability adds another layer of stress for those who rely on their vehicles daily. Public transportation, while often a more affordable option, is not always readily available or convenient for everyone. Many areas lack sufficient public transit options, forcing people to rely on their cars. These rising transportation costs add another layer of financial strain, particularly for those who rely on their vehicles to commute to work or transport their families. The cumulative effect of these rising costs is a heavy burden that many are struggling to bear. The recent jobs report, while indicating continued job growth, has also revealed some concerning trends. Despite the increase in job opportunities, there are underlying issues that cannot be ignored. Wages, while increasing, are not keeping pace with inflation. This discrepancy is causing significant financial strain for many workers. This means that many Americans are effectively experiencing a pay cut, as their earnings are eroded by the rising cost of goods and services. Everyday essentials like groceries and utilities are becoming more expensive, stretching household budgets thin. Adding to the economic uncertainty is the Federal Reserve's decision to raise interest rates. This move, while aimed at controlling inflation, introduces new challenges. The Fed's move, intended to combat inflation, has made borrowing more expensive. Higher interest rates affect everything from personal loans to business financing. This can have a ripple effect throughout the economy, impacting businesses and consumers alike. The increased cost of borrowing can slow down consumer spending and business investments. For businesses, higher interest rates translate to increased costs for loans and credit. This can hinder their ability to finance new projects or expand their operations. This can make it more difficult for companies to invest in growth, expand their operations, or hire new employees. The potential for reduced hiring can have long-term effects on the job market. In some cases, businesses may be forced to scale back their operations or even lay off workers in response to these rising costs. This can lead to increased unemployment and economic instability. Consumers are also feeling the pinch of higher interest rates. The cost of borrowing for major purchases like homes and cars is rising. Mortgages, car loans, and credit card debt all become more expensive. This can deter people from making significant financial commitments. This can put a strain on household budgets, leaving less disposable income for spending and saving. Families may find themselves cutting back on non-essential expenses to make ends meet. The combination of stagnant wages and rising interest rates has created a sense of financial vulnerability for many Americans. The uncertainty of the economic future is causing widespread concern. The Federal Reserve's actions are a double-edged sword. While they aim to curb inflation, they also introduce the risk of economic slowdown. While intended to curb inflation, they also carry the risk of slowing down economic growth. This delicate balance is crucial for maintaining economic stability. This delicate balancing act has left many economists and analysts cautiously observing the situation, uncertain of what the future holds. The path forward is fraught with challenges, and the outcomes remain to be seen. Section 4. Amazon's stumble, a sign of things to come. Amazon's recent stock market performance has sent shockwaves through the financial world. The company's stock price plummeted, wiping out billions of dollars in market value. This dramatic decline is a reflection of growing concerns about the company's future earnings potential and the broader economic outlook. For years, Amazon has been a darling of Wall Street, consistently exceeding expectations and delivering impressive growth. However, the company's recent earnings report revealed that even this e-commerce behemoth is not immune to the challenging economic climate. Slowing consumer spending, rising costs, and increased competition have all taken a toll on Amazon's bottom line. The company's struggles are significant not only for investors, but also for what they signal about the broader economy. Amazon's vast reach and customer base make it a bellwether for consumer spending trends. If Amazon, with its massive online marketplace and loyal customer base, is experiencing a slowdown, it stands to reason that other retailers are likely facing similar challenges. Amazon's stock plummet serves as a stark reminder that even the most successful companies are not immune to economic downturns. It underscores the interconnectedness of the global economy and the potential for ripple effects when major players experience difficulties. Section 5. From Amazon to Walmart, a ripple effect on retail. Amazon's woes are not limited to the tech giant itself. The company's recent struggles have sent shockwaves throughout the entire retail industry, affecting not just its own operations, but also those of other major players. The ripple effect has raised significant concerns about the health and stability of other retail giants like Walmart, Target, and Costco. These companies, which have long been seen as indicators of consumer spending habits, are now facing their own set of challenges. These retail behemoths, while not entirely immune to economic fluctuations, have traditionally been considered barometers of consumer confidence and spending. Their current struggles are a clear sign that the retail landscape is undergoing a significant transformation. Walmart, the world's largest retailer, has already announced a series of store closures and layoffs. These measures are a direct response to slowing sales and rising operational costs, which have put immense pressure on the company's bottom line. Target, known for its trendy merchandise and affordable prices, has also reported disappointing earnings. The company has warned investors and consumers alike of potential future challenges, indicating that the road ahead may be rocky. Costco, the warehouse club giant, has fared relatively well compared to its counterparts. However, it has not been entirely immune to the broader economic pressures that are affecting the retail sector. Even Costco is feeling the pinch. The challenges facing these retail giants are indicative of a broader trend of shifting consumer behavior. As economic conditions change, so too do the shopping habits of consumers. With inflation eating into their budgets, shoppers are becoming more price-conscious and selective about their purchases. They are scrutinizing every dollar spent, making sure they get the best value for their money. Consumers are now less likely to splurge on discretionary items and are more focused on finding the best deals on essentials. This shift in priorities is forcing retailers to rethink their strategies. This shift in consumer behavior is forcing retailers to adapt quickly. They are offering more discounts and promotions, streamlining their operations and focusing heavily on their online presence to attract and retain customers. Retailers are also investing in technology to improve the shopping experience, both in-store and online. They are enhancing their e-commerce platforms, optimizing supply chains, and using data analytics to better understand consumer preferences. However, these measures may not be enough to offset the broader economic headwinds. The retail industry is at a crossroads, and the coming months will be crucial in determining which companies can adapt and thrive in this new environment.